Hey, everybody, welcome back to the Loan Officer Playbook, the podcast where we talk about real insights and strategies in loan origination. Today, I'm joined with Justin Lopatin. Justin is the SVP at OriginPoint, and Justin has close to 20 years of experience in the business. Welcome, Justin.
Thanks, man. Appreciate it, Michael. Good to be here.
Amazing. Justin, you just came back from a trip in Atlanta, doing a bunch of presentations. How did that trip go?
The trip was great. As I mentioned, OriginPoint is the in-house lender for Compass. So it's a Compass-owned company backed with Guaranteed Rate. It's a JV partnership. And so I was with Guaranteed Rate for a long time. So OriginPoint, we work directly with Compass agents, around the country. And so I was in Atlanta meeting with a few hundred new agents, trying to launch the market, just create some relationships, share some good information. And I came back having accomplished all that. So I feel good about it.
Awesome. How do you see that sort of like realtor partnership as a lender? That's like the ultimate partnership because the realtors have the leads and then you have the money to do the lending. That's just like a partnership just fits perfectly.
Yeah. I joined OriginPoint basically at the beginning of the year. So it's end of August 2025. I joined literally January 1st. And part of the reason I came over was, I'm at a certain stage in my career where I asked myself, where do I want to be in the next 5 years? Where do I want to be in the next 10 years? And as you and I mentioned, you and I got to know each other prior to the podcast, I told you, for the last three and a half years, I've been heavily involved in a coaching company. I really had a lot of success originating for 15, 16 years, then kind of, packaged up some of the skills and knowledge and information my partners and I had, and we started coaching the loan officers we used to be 10 years ago because we are products of coaching. So coaching changed my life, mentorship, having a plan, having accountability, having a blueprint really changed my life. And so I say all that to say, after a couple of years of doing that, I was helping so many loan officers and just pouring all my energy into coaching. I kind of started to get FOMO. I'm like, man, I'm helping other people really crush it. And I kind of have 80% of my time focused on coaching. And so it was a lot of introspect. And I asked myself, I said, these next 5 to 7 to 10 years, like who am I? Am I a coach that also does loans? Or am I a loan officer that can also coach? And I realized that I was kind of transitioning more so into coach that doesn't do as many loans as he used to do. And so part of the reason I went to OriginPoint was I wanted to get on a platform that had an edge, meaning all the different mortgage companies out there, from big correspondent lenders to credit unions to even some of the brokers, a lot of it's just, a sea of sameness. They're like they're all the same. Not a lot of people have an edge, right? And so you mentioned it. Real estate partnership to me is an edge. Compass is a publicly traded company. It's a number one brokerage in the country. They're gobbling up and doing M&As left and right with small and medium-sized brokerages. A lot of big producers around the country have come over to Compass. So for me, going deep with a high caliber group of people that are committed to a partnership and to building synergy and vertical integration together, I couldn't find a better situation for me that checked the boxes I needed to be at the right company to kind of really grow my business these next 5 years.
Yeah. You touched on something vertical integration, and that's like a trend that I have been seeing in the industry. I'm not sure if this is something new, but we saw Rocket and Redfin, and we're seeing like these people that control some sort of like part of the stack, coming together and say, let's build a vertical stack for this particular side of the industry. Like, do you see that as being like more common moving forward? Are we going to see more partnerships and more vertical integrations moving forward?
Yeah, I think so. The way I understand it, practically, if you're paying great agents 80 to 90% as a real estate company, you're not making a lot of money, right? You got overhead, you're running a business, you're providing support, technology, investing in agents, you name it, right? Overhead, real estate, offices. You have to make more money somehow, some other way. You got to pay people well. You got to, compensate great agents fairly. So how else can you earn revenue? And you can earn it through title, you can earn it through mortgage. And so this started really becoming more, I would say, common, in my opinion, during the pandemic, because you saw technology and, just an acceleration of a digital mortgage process to where whether it was a Keller Williams or a Redfin or a Coldwell Banker, you saw these really big companies starting to go, okay, how can we align ourselves with mortgage and title? And do we either A, partner in JV, or do we B, build from ground up? And I think some people try to build from ground up and realize that it's very difficult. You'd almost rather plug and play with an established entity that knows how to execute, and then you create this integration where over time, if the right people are running together, it works. And so many years ago, like I always thought of a lender that was like working in a real estate office as like just kind of like this nerdy guy like in the corner that was like paying $500 a month, and like every realtor would walk in and he'd be like, hey, you want a bagel, you want a donut? And so I would laugh at that like kind of structure years ago, because to me I was like, okay, you're either giving away a lot of money to be there, you're paying a lot of money to be there, or all the really good realtors don't use you because you the the dynamic of it just felt not like fluid.
Yeah.
um the rate, my former company, formerly Guaranteed Rate, now Rate, they've successfully done this with that properties. They've successfully done this with Coldwell Banker. They've successfully done this with KB, I think Builders, I think is their name, KB Homes or something. So this is the fourth or fifth JV over the last decade. And so Robert Refkin, the head of Compass, like forward thinking, very progressive, very much invest in the business, right? Like generate revenue for the shareholders and run a great company, was like, why would we build a mortgage company from ground up? Let's partner with some incredible people that have already done this. And so to answer your question, I think it's the dynamic of it has continuously evolved
Yeah.
to where you have a forward thinking digital technology based real estate company and a forward thinking digital technology based mortgage company that get it.
Yeah.
And so we're seeing a lot of synergies to the tune of where this year I was telling you offline, we're tracking to be a top 25 mortgage company on pace for 4 billion funded in under 4 years.
That's impressive. It's like, why do you think other people that have tried the um, building from the ground up, why haven't they succeeded? Because on face value, you can see, well, hey, there's some sort of technology that powers it, and then we can build the technology. Developers are everywhere now, a dime a dozen, plus AI coding tools. Why do you think it's a technology? Do you think it's the people within the companies? Like, what's the reason? Why did people fail?
It's a people and relationship element that creates synergy. And specifically what I mean by that is Compass, in this example, they want to make sure that they, for lack of better terms, approve and endorse the loan officers that OriginPoint is bringing on, right? So instead of being like, we have 100 people, you have 100 people, let's just throw them in the room and like make friends, there's a little bit of more due diligence to make sure that they're either endorsed internally from Compass or recommended over time, or they go through a vetting process. We as lenders go through a vetting process to where the region, the agents, the managers, the infrastructure in the market you're in feels very much like you'd be a great fit for the dynamic of agents. And they're going to endorse you, and they're going to support you, and they're going to really make sure that you are in a position to succeed. And the cool thing about Compass is, the culture of Compass is very much, again, like what's good for the company is good for everyone. And it's a very unique culture, because it's not like everyone's a lone wolf.
Yeah.
Like, one of the cool things about Compass is that they have such an incredible referral network. People are moving around the country since the pandemic, from New York to Florida, from California to Tennessee, from Chicago to Tampa. I mean, the migration around the country over the last 5 years has been amazingly high, right? So you have this huge infrastructure of agents around the country that are referring each other business, that are using the different partnerships they have. And what they're realizing is that they're finding that the more revenue they create, the more support there is. And it's this cycle of revenue and benevolence that just plays into the culture that they've built. And part of the reason I came over was because I saw that from the outside prior to me coming over. I was working with Compass for the last decade in Chicago, and I came down to Florida 5 years ago, working with a lot of good people here. And so, whereas many years ago I never believed in the model, now I very much believe in it. And I've been here for 8 months, and it's exactly what I thought it would be. So it can work, man. But it's very much a people, a synergy, um, boots on the ground element. It's not a technology. It's not a like AI. Like, it's a people business. Realtors and people that are doing deals, they have to trust you. and you have to be vouched for and then earn the trust. But like it starts out with like buy-in, validation and trust in what you're building together, which to me is all about relationships. It's not about technology.
I think more people need to understand that because there are times when you come along a great technology company that has reasonable market share in the tech space and is like, well, I can actually just build a mortgage business or I can just build a realtor business. So we've seen Zillow. They started their home buying business. It didn't quite go well. But one example of that, a pretty successful company, Open Door, they started their mortgage business in 2016 and then shut it down. But on face value, you would think, I mean, folks are going on Open Door to search for homes. It seems like an easy integration where Open Door, a great technology company, they can just build a mortgage business where folks are searching for homes on Open Door, and then they can just get the loans to fund the homes on Open Door. But that did not quite work because it turns out that people are searching because they're shopping around, but they always have that, I got a guy, I got a guy that I got to go to. And then, this is my guy, this guy that does loans for me. And that's the thing. I've met loan officers that have done loans for 3 generations, like did loans for the grandparents, the parents, and now
Yeah.
doing loans for the kids. It's very much a relationship business. And you being in the industry for this long, I know you started when you were very young. How old were you when you started in the business?
I started the month I turned 22.
The month after you turned, so you were literally a baby when you started,
Yeah.
and a lot has changed over time. But what were, some of the early mistakes you think you made in the beginning that if you go back, you would not make those mistakes again?
If I'd say I made mistakes, to be honest with you, I was with a great group of people that I had great mentorship. I had great um, support from like a standpoint of, the guys I was working with weren't out like partying and doing drugs and just like we were making good money at an early age. So honestly, like we didn't really make a lot of mistakes. But if I look back, given this was 2006, there was no technology. I didn't have a computer on my desk. Like I had a Razor phone. I literally had a piece of paper, a pen, and people would come in and I'd scan documents and fax documents. I would say I wish somebody would have told me to treat this like a career and not a job. You know what I mean? And specifically, I didn't know that this was going to be my career. So it was kind of a job, meaning it was a little bit more transactional. I was younger, right? I didn't think this is how I'm going to support my life, my family. This is like these relationships I make or don't make today create a residual element. It's almost like an annuity, right? Like these relations, like you said, the client I helped in 2010, I've helped them now 5 times since then, and maybe a kid or a cousin or a neighbor of theirs. And so I think there's something to be said about the long-term residual element of running a financial service business and the lack of thought into your relationships and your database management. As much technology as there is, as many creative automation and CRM, like widgets there are, people still do a very poor job staying in touch with the clients they've already helped. We work so hard to get new clients, but we put little to no effort into taking care of the clients we've already helped and keeping them. That,
Some
in my opinion, would probably be classified as a mistake.
doing a lot more retention, retaining the customers more, being less transactional. The mortgage business, it's one of those businesses where you can see 50% attrition in the labor market in a downturn. I could not fathom that. Like, oh, you were a loan officer and now rates are high, so not much business. But then 50% of folks like don't renew their licenses and all of that. So that's one of the things that was quite new to me. That folks come into the business, but they treat it more of a job rather than a career. I was talking to someone who he was telling me this phrase. Like most loan officers, they like to say, well, I have one more boom left in me. It's like always looking forward to the next boom. So it's like folks come in and it's like, when are rates gonna go down? Like folks are like, I'm preparing for when rates are gonna go down, but you can still do business today. Look at you guys. You're thriving and doing business in a high rate environment because you treat it as a career, and this is something that you want to do and not like something that you do on a one-off basis.
Yeah. No, I mean, most of our company is absolutely crushing it right now. People are having record years in a down year. back to back. 24 was really rough. 23 was rough. 25 for a lot of people is rough. To just kind of touch on that, when you're all about the now, right? And like I'm waiting for the boom. I'm waiting for rates to come down. That's complacency, and that's reaction, right? Like proactive, assertive loan officers that approach the business with a level of commitment and consistency thrive in any market. I don't care what rates are. I'm going to wake up. I'm going to get into my office, whether it's my home office or my office. I'm going to make some outbound calls. I'm going to create some content. I'm going to schedule some appointments. I'm going to call some leads that haven't been converted. I'm going to do 4 to 6 proactive sales activities every single day, no matter what. Rain, snow, sleet, shine, 3%, 30%. I'm doing the things I need to do every day. And that's the mentality of a great loan advisor that's going to have a long-term business. And that's why, in my opinion, it's kind of an 80-20 industry where I think like 20% of people make 80% of the money. And I think the other 80%, they're in a tough situation, unfortunately.
When you say that, if anybody who is mildly ambitious would say, well, that sounds easy. I mean, I'm going to come in, make a couple of phone calls, call leads that haven't been converted, stay in touch with my past clients. Like, how hard can that be to do every day? In your company, it seems like it's a lot of winners. So winners attract other winners, and then they just like pump themselves up. I've worked in teams where, someone on the team was just like dragging down the entire team. I didn't feel comfortable or like even motivated enough to keep working. But then once I'm on a team where everyone's an A player, I'm like, oh my God, I have to keep working. So do you think that it's a lack of enough A players on the team to motivate others, or is it something else?
It's a lot of things. It's complacency for people that have been in the business for a long time, had an amazing pandemic era like revenue situation, and then just got used to the phone ringing. So there's a sector of the industry that they did everything they needed to crush it 2021, 2022, 2020, 21, 22, and then the rates completely went up and like everybody fell off a cliff and they just stopped doing what they did to get to 2020, right? So there's this sector of complacency. Then there's a sector of the business of the industry where I just think people are kind of like part-time. It's not their main thing. They have a loan officer license. They do it if someone needs it, but they're very reactive. They're not all in. Then I think there's a sector of the industry where they got into the business within the last 5 to 7 years. Rates were low, but they didn't have a huge network or database from previous years, so they really couldn't capitalize on it. They got a taste of a couple maybe good months when rates were low, and then they ended up in a situation where they're like, holy cow, what do I do? I'm at some company that I thought was going to support me. I got no support. I'm working from home in my sweatpants. I'm on an island. I got no environment. I have no direction. And I literally am sitting here in my basement, like on Facebook all day because I don't have a plan, right? The being 100% commission is a gift and a curse. It's a gift because you're in a business where you can make 50 grand a month. You can make 150 grand a month. I've seen it. I've done it. You're in a business where you can make nothing 6 months in a row. I've seen it. Haven't done it. I've seen that. And so having consistency and discipline to do boring sales activity every single day, it's a lot easier said than done. And to not be in the right environment post-pandemic where a lot of the industry has dispersed in a remote hybrid style situation, it's very hard to be self-motivated every single day and really do the work when no one's watching. Human nature is to cut corners when no one's watching.
You mentioned something about building your database. As folks were focusing on that and stopped focusing on that. If you were to get started with building your database today in 2025, where would you start?
Well, to me, a database is a client database, right? So I mentioned, taking better care of the clients that I work so hard to get and not neglecting them. But what I think you are asking me is building your network. And I think professionally, you have to build your network a few ways. Number one, in my opinion, in the modern era, you need to be on social. You need to have 2 or 3 different, platforms that you create content for, whether it's Facebook, LinkedIn, Instagram, YouTube, TikTok. You need to leverage content. You need to leverage modern marketing. And I think you also need to leverage, relationships. So there's traditional networking, right? Whether it's BNI, meeting 3 to 5 new people every week, joining chambers of commerce, calling on advisors and CPAs and having a lot of one-on-ones. And then there's your social network and your social influence and your social equity. Facebook, LinkedIn, Instagram, long form content, short form content, email marketing, newsletters. So I want to get my product on as many shelves as possible. I'm the product. I need to be in your email. I need to be on IG short form. I need to be YouTube long form. I need to be speaking to you so you hear me verbally. I want to meet and see people belly to belly and shake hands. And I'm going to make phone calls. So if you're building your network, you have to have all the tools in the toolbox to do it the right way.
Why did you say I am the product? What can you elaborate more when you mean I am the product? You mean like the
Yeah.
loan officer is the product?
The loan officer is the product, meaning I believe that people buy you, not your company. People don't buy my company, they buy me. The realtors, they work with me, right? My clients work with me. They don't know my company, they've never heard of it. I'm the product. And so, in order for me to create as many opportunities as possible, I need to get my product, which is Justin, the mortgage lender, and the solutions that I bring. I need to describe those, explain those, articulate on those authentically on as many platforms as possible, written, video, verbally, email marketing, etc.
It's interesting. If you think about, the business, whereas the product is not the loan product that you're selling, but you yourself, it starts getting to the point where branding becomes top of mind. How do you appear? Like, which are some of the places that you're on? But then you also have the complacency problem, whereas you've built your brand, you've built your book of business. Now you're 100% referral based, and you're getting referrals and references every month. You're getting like a couple, and you can live a comfortable life off of that. My question is now, like, how do you scale yourself as a product? Like the loan product, it's scalable. You can sell it to as many people as possible. But if you are the product, the personal relationship that you have with the client is also part of the product experience. But you cannot have that personal relationship with hundreds of people, or can you?
It's a great question. So in this business, most people plateau because everything has to flow through them, and they think they have to have their fingerprints on every aspect of a consumer's transaction in that context. And the reality is that's not the case. The home buyer is a client of mine, but my realtor partners and the referral partners I work with, those are my true clients. Those are the people that I support and serve monthly, over and over and over again, daily, weekly, monthly. So while I love helping the home buyer, and of course that's ultimately who we're serving, the relationships that I'm in are really with my realtor partners. So in order to scale, I focus more of my time on relationships and getting the loans, and I delegate the doing of the loan process, the analysis, the tax return, the document collection, the processing. And so in order to scale your business, you ultimately have to be able to delegate, hold your team accountable, and really audit their work and continue building relationships. So you have to learn how to hire, how to train, how to multiply people, how to hold them accountable, and how to have a process that can be repeated over and over and over again, no matter who's actually at the helm of that specific task. And that's a skill that most loan officers never learn.
Do you think you need to have a big team in order to be able to delegate? Because what if I'm a one-man team?
Well, no, a one-man team, then you're not a team. You're a one-man show. You need 1 to 2 people on your team.
Yeah.
You need someone to help you. There's 2 parts of the loan process, right? There's pre-contract, so there's loan origination, pre-approval, lead generation, qualification, right? Like getting like loan applications ready and numbers, etc. And then there's from contract to close. Once they go under contract, what happens from contract to close? So ultimately, if you want to do 10, 15, 20, 30 loans a month, you need at least 2 people on your team. Someone helping you on the front end of the loan origination cycle, from lead onboarding through contract. So pre-approval, pre-qualification, document collection, pre-underwriting. And then you need someone helping you take the loan from contract to close, and that's a loan processor. So to really scale, you need a front end loan partner or sales assistant, and you need a loan processor to support you and your clients from contract to close. That's not a big team.
Can't that be the same person? Same person being the front end loan partner, and then having the loan processor be the same person?
It can until a certain level of production.
So in your mind, you're like, you only need a team of 2 to build a
Yeah.
successful mortgage business.
You can have a team of 2 and build a 7-figure business.
Oh, wow. Have you found any people that have done that success, like with a team of 2 and have built a successful lending business?
Yeah, dozens.
Dozens, yeah. I know two brothers outside of Texas, and those guys are, they have the brother relationship, which also means they work well together.
Yeah.
They understand each other, but one of them just takes care entirely of the processing. So he's a processor. Like I have never actually even seen him. Like I just know that so we'll call him Dave for the purpose of it. I just know that Dave exists, and then his brother tells me like, "Hey, Dave's gonna handle but his brother just handles the front end of the process." I'm like, so Dave is sort of like this legend where you have behind the scenes, and he just like does all the things. And I feel like this is something that a lot of people in the industry um, should try to do because many times I talk to producing branch managers. They're always trying to recruit more people, like always trying to recruit the best loan officers. Like, hey, come work for me. Like differentiating themselves through tech, differentiating themselves. But in tech we have this thing of hoping that one day there would be a one-person billion-dollar company because you want to run a lean, efficient, SEAL team, sort of like six of people who are just very good at what they do. And I feel like there are some companies in mortgage that do that, but it is not apparent in every mortgage company.
Yeah, no, I agree with you. I think most managing producer or whatever you said, sales managers, or whatever, they're not doing loans anymore. You know, so they're just trying to recruit people and sell them a vision that they may not even be executing yet. Most companies, I mean, and this is not a shot at anybody, but like most sales managers and recruiters are not actually in the trenches anymore, and they don't know. They think they know, but they don't know. And you hire someone and you expect them to go get business and then do the business and submit the loan and work on. It's like a food truck. Like my favorite analogy, I was on a podcast years ago and I gave the analogy about a food truck. Like you can't scale. Like a food truck can only get so big. If you're the only person cooking, cleaning, chopping, dicing, sweeping, mopping, serving, like eventually your ketchup runs out, you're out of food, and like the lights go off, right? But like if you run a nice little diner and you got a hostess and you got a cook and you can walk around and greet everybody at the table and make sure they're having a great experience, you can serve more customers. And I think that analogy is very appropriate. And so, I don't know that you actually asked the question there, but there's certain companies that believe in sales and operational like fluidity, meaning there's a staffing to sales kind of like management as loan applications and credit pulls increase. We're going to anticipate we're going to need more support down the road so we can avoid bottleneck. And you got to support great salespeople. I mean, at the end of the day, we're in sales. I mean, whether or not people want to agree with me or not, like we're in sales. No sales, no business,
Yeah.
right?
Yep.
So salespeople got to sell, and to make sure salespeople have enough support to sell, they need good operational processing support. Ops drive sales. If I can go get business, and I'm confident that my team, with my obviously involvement, can get it closed quickly, efficiently, and deliver a great experience, I can go bring in a ton of business because I'm selling with confidence and conviction. But if I got to go get the business, then come back home and work on the business, I'm going to have months like this all the time. I'm going to get busy, then I'm going to be slow because I'm working on deals, and then it's going to take me a few weeks, then I'm going to get busy again, and then I'm going to be slow. And then you have this month to month, and that's why most loan officers plateau.
Yeah. So you sort of like just need this world-class sales team that sort of like brings in the business, does the origination, and then you need to have another world-class processing team that handles the volume that you bring in. Because you can't just keep bringing like, 100 leads a month and not having the enough processing power to process those as you have a lot of bottleneck as you continue to grow. Um, I want to ask you, Justin, because we've talked about how companies can differentiate themselves by partnering up with another company that is complementary to their vertical and then dominate that vertical. And now, what if we go one step deeper? How can individual loan officers, how can they differentiate themselves
From each other?
from each other and other loan officers?
I think there's a few things that are obviously, pretty cliche and like clear, if you will. But number one, I think being authentic and being yourself in a world where everybody is the same, so whether that's being authentic about your hobbies and interests so that people relate and identify with you more, whether that's, just like, you know, really leaning into a specific demographic or niche that maybe you love working with teachers or first responders. But I think to answer your question, you know, being authentic so that people know who you are and what you're about. If everybody does the same thing, there's really no like difference, right?
Yeah.
But if I love, I'm going to make something up, horseback riding and sailboats, and I talk about it and I market myself as a guy that loves horseback riding and sailboats, and I start making friendships around that, people start to know me as a human that also does mortgages instead of a mortgage guy that has no personality or no, kind of dynamic outside of doing loans. And so ironically, I think who you are as a human and some of the interests that, that you have, or your family dynamics, whether you're a mom, a dad, a workout person, a travel person, a yogi, whatever, people connect with people. So to differentiate yourself, I think you have to be comfortable and confident about what you like to do outside of work and make friends with people so that they like you as a person. Because if they like you as a person, they'll do business with you. Um, Aside from that, I think, being a jack of all trade, master of none is a recipe for, plateau. I think at some point you have to have some type of edge, whether you're a masterful loan technician, whether you're super good with VA loans, whether you're, the king or queen of new construction or rehab or physician loans. I think going deeper is such an underrated opportunity because everybody is like, I work with all these banks and I can do every loan in the books. And you just kind of camouflage yourself with everyone else. So I think speciality or specialties or like hyper focus, like segmenting of the business is an opportunity to just stand out a little bit and speak to the client you want to attract.
What do you think of coaching as a way to differentiate? Maybe not coaching other loan officers, but just coaching the consumer, like educating them.
Yeah, I mean, I don't think coaching is the right word. I think educating consumers is more appropriate if that's what you're talking about. And I think that falls back into the content discussion where creating educational content to empower, to educate, to inform, to encourage consumers to make better decisions is a huge differentiating factor, which has been a huge part of my business over the last 5 or 6 years. Like I mentioned, I create a lot of content and I know it works because I get a lot of inquiry and I get a lot of just visibility to where people are reaching out to me. I saw your video on YouTube. I've seen your stuff on Instagram. I saw you on Facebook. And it gives me, I think, credibility.
Yeah.
And over time, credibility is trust. So if you can consistently create educational content and you can talk to the client you want to attract and talk about credit and down payment and loan options and just different strategies that may seem simple to you, but are very much not, like complicated to the consumer. If they can learn from you, they will trust you. And if they trust you, they'll work with you.
Yeah.
So I think it's very important.
This is something that I would want it's an honest question asking you because I personally need an answer to this question for myself too. Is where do you find the things to talk about and what's the bar for something that's like too simplistic to talk about? Or, let's say you have a hobby and let's say, for instance, your hobby is hockey and then you're going to go get a hockey puck or something like make a video talking about it. I struggle with that because when you work in the industry, you have a mental model of what is worth batting an eye for, and then what's just not important at all. But if your audience doesn't quite understand, because so I run a tech company, and so we would make a small UI change, and I'll tell my marketing team that, hey, we'll have to market it. We have to market this because, like, let's say right now you have better search, and then my marketing team would be like, well, that's kind of expected. We probably should not market this. I'm like, no, we should market like every small little thing that we do. Like everything is content. So, as a loan officer, who is also a leader. Now, how do you find like different things to talk about in your life? And do you have any bar for things to talk about? You just talk about everything.
Are you asking specifically about content?
I'm asking you about content. Yeah. How do you find different types of like content to talk about?
Yeah. Over the years, I've invested in, time and dollars in learning from content creators that have helped me find not so much my voice, but that have helped me find frameworks and clarity around creating content. And I think for me, I've learned a couple different simple ways to, kind of like compartmentalize and strategize on my content. So for example, like we used to talk a lot about like the 4 or 5 E's of content. So if I were going to, make content 5 days a week, one day I would want to educate someone. The next day I would want a piece of content to be encouraging. The next day I would want it to be entertaining. So education, encouragement, entertainment, that's me being authentic and, me sharing some personal stuff, right? That's one. And the last one is, I can't remember the last one. Maybe it's 4 E's. Empathize, right? So I can empathize with someone and say, hey, I know how difficult it is to be a first-time home buyer. I know you think you need perfect credit, but I got news for you. You don't. Here are 2 loan options that you may want to consider as a first-time home buyer, and it's totally okay if your credit's not perfect. I now am speaking to you and empathizing with you because you have a concern or a fear around imperfect credit, right? So you can empathize, you can educate, you can empower, you can encourage, and you can entertain. And so that's like one of many simple frameworks I've learned over the years. But I think at the end of the day, having some type of plan, right? Like I just explained, helps. And I think the second thing that's been helpful is I reflect back every single week on all of the transactions and clients and questions and emails and deals that I'm working on. And I look back on a Sunday and I ask myself, what question did I answer 5 times? What 3 new deals did I just put under contract, and how do we structure these deals? What was a big a hurdle or objection we overcame this week as a team? So how can I take a real scenario, package it up into something educational, encouraging, empowering, empathetic? And so, in my opinion, the real day-to-day experiences are the content. I'm the content. The conversations I'm having every day are the content. That's where you take it next level.
I like the one when you said, "What questions did I answer?" Like what questions are people asking me about during the week, and just make content about that. Because that might actually just be the absolute cheat code. Because as a loan, people asking you questions all of the time. There could be infinite scenarios, and then you just talk about some of the scenarios that you had and how you helped people. I didn't quite think about it that way. So if you
Skill.
reflect, yeah,
It's a skill to reflect,
yeah.
and it's a skill to take the experiences that you've had and to package them up into a well articulated message. So yeah, I think it's a conscious skill that I had to learn over time, and it takes time. It takes time because it's hard to get your thoughts into words that resonate with other people. And so now with like ChatGPT and Gemini and different ways, you can package up a scenario and then get it articulated in a clean, clear, crisp way.
Mm.
So, but in my opinion, that's the most potent way to create content consistently. But you have to actually be working every day and having experiences to reflect on too.
Yeah, it's becoming a writer. It's like you reflect and then you write it down and then you have to like record the script.
Oh, you're
Yeah,
100% right.
yeah.
No, you're 100% right. It is. There's a skill set of creativity and again, right? Being able to articulate your thoughts, being able to creatively take something complicated and share it in a way that's relatable. Um, it's a powerful skill that I think the modern loan advisor needs to be investing a lot of time and energy into. And when I say a lot, I mean within their marketing, kind of pillar of their business, because that is the way that you connect. You share the wins and the success stories of other people. Um, and you highlight how you're helping other clients to demonstrate why you're skillful and why you should be, why other people should be finding you to help them with the same problems and challenges.
What percentage of their time do you think should be spent on sales, marketing, relationship building, and I think the final one, processing? I think I kind of know what you're gonna say, but where should they be focusing, their attention?
They, as in a loan officer,
As a loan officer, yeah.
I think loan officers, and I learned this many years ago, it's offense and defense. Offense is sales, right? So sales includes relationship building. Sales includes a little bit of marketing, like sitting there and writing scripts and recording videos for 5 hours. That's not really sales, but in some regard, right? Like, so I think people need to be on offense minimum 3 to 4 hours a day, minimum 3 to 4 hours a day. That could be one-on-one meetings. That could be sales calls. That could be client consultations. That could be, like going to an event, hosting an event, doing a webinar. I think you need to invest at least an hour a day into your marketing. So that could be actively engaging in social, starting, commenting, creating content. That could also be, preparation for an email blast. And then I think the other, right, if we're talking 8 hours, the other 2 to 3 hours are operations and management, right? How am I managing and leading my team? and how are we operationally communicating to make sure deals are moving along the timelines. But, you know, it's all interconnected, right? Marketing eases sales, operations makes sales, right? Drive sales, but like you can't just sell, right? Like you
Yeah.
need to sell, you need to have ops, you need to have marketing, but sales is the engine of any business. No sales, no money.
That's something that's I don't think a lot of people understand because folks try to say, well, I'm 100% referral based. I'm just gonna like get my referrals and then build a successful, stable business. And if that's you, that works for you. And there's like the other part, it's like, hey, I know that this is a sales first role. So I'm going to try to brush up on my sales skills, and everything else that has to happen within that, like marketing and all of the relationship building and the branding, all comes to play in sales. And so I think we're always going to wrestle with these two different dichotomies of the business. But this has been one of the most insightful episodes in the fact that you shared actionable points. So I took so many notes. The 5 E's, that's definitely something I'm going to do. Playing offense is definitely something I'm going to do. So Justin, I want to thank you so much for coming on. How would our audience reach out to you?
Depends what they need, right? No, I'm kidding. I'm on social media, so I mean, just Justin Lopatin at Justin Lopatin on Instagram. That's probably my most active platform. But I am on Facebook and LinkedIn, just my first and last name. And like I mentioned to you, I'm building out the Southeast, Florida and Georgia specifically. So I'm looking for loan officers that are seasoned and experienced in the Florida and Georgia market. We have some incredible opportunities with regards to the Compass partnerships around each state to really help someone change the trajectory of their career. And so, you asked me, I'm telling you, if someone is in that space where they may not be on the right platform, they're open for another opportunity, and they want to be around someone like myself, and they want to be around a partnership, with an amazing company like Compass, feel free to shoot me an email, justin@originpoint.com, or find me on social. And I welcome any conversation or anyone in the industry that wants to share anything valuable or just chit chat.
Awesome. Everybody, I'm going to put the links to Justin's profile and bio in the show notes. So go ahead and check it out. Justin is a phenomenal leader and salesperson, and anyone would be lucky to work with him. Thank you so much, Justin.
Awesome. Michael, appreciate the time, man. Great to be here.